Good afternoon for the floor. See me. This is Chris Robinson with your Traders Exclusive comment today. We're going to talk about the grains and the livestock, and one small comment about the Dow. Start with the Dow. Just the rally that won't ever end, right? We're now with the Dow cash around 23.4, 23.3. We're about 1,800 points away from 25,000. That's 7%. So put that, idea. A lot of people have been very negative on this market, been calling for corrections forever and ever and ever. At some point, it is going to correct, but I would just say that this market seems like it just wants to keep climbing the wall of worry, climbing the wall of naysayers, and at some point we will have a correction. My one caveat will be this: if the Dow's at 23,000, a 5% correction, 1,000 points. 1% is 230. So we may be running into a time period here where we start having 100, 200 point moves, and you're going to have to kind of get used to that. So I would say if you're going to be trading the Dow or trading the S&P, when volatility returns, and it will, you need to have your chin strap buckled because it's going to start swinging one of these days. I traded that contract back when it was still in the pit years ago. And we went through some times like this where there was just no movement. You just have to be patient for when the movement comes. Okay, very quickly, what's going on in the grains? We had a bullish bean report at the last USDA. We got above $10. $10 failed. What are we looking at? We're looking at South American weather. If South American weather continues to be non-threatening, in other words, there's no drought or there's no floods, the two extremes, we could see prices continue to dwindle. Now, we have had good export demand, but technically we're stuck in this kind of a dismal trading range. I would be careful. I would watch the 200-day moving average and the 100-day moving average in November beans moving forward. Pull the car over and talk about corn and wheat. They're continuing to try and carve out a bottom. As I walked over here today, Friday, corn was lower. It looked like it might go down and retest the low from the USDA report day. If I'm a producer, I'm just making sure that I've got some sort of floor, and I'm looking for opportunities in the future to sell if we do get a rally. But to think that there's no risk left in corn, I think that's a little naive. Like I said, I came out here in 1991, and I've seen corn at $1.50. I've seen it at $7 and $8. So to have corn grinding around here at $3.50, what's your risk? Most likely your risk is 30 to 40 cents downside. The one thing you've got against you if you're a bull in corn is the fact that the managed funds are short about 160, maybe 170,000 contracts. So they're leaning on the market. Obviously, that's also a good contrarian. If we did get some sort of a demand issue or a weather issue, the managed fund, they'd have to chase those shorts. So that's sort of what we're waiting for. It's this teeter-totter, waiting to see, are we going to pop out of this range and which way? And honestly, I think that wheat will be a follower more so than anything. Wheat will be following corn. That's about it. We do have a cattle on feed today for you livestock traders out there. If you look at a chart of feeder cattle and fat cattle, feeder cattle compared to this time last year, we are $40 higher. Fat cattle compared to this time last year were $20 higher. Even the lean hogs, they are $10 higher than they were last year. So we've had a good rally. I would say this: nobody knows what they're going to say on the report. Those are the days you want to take protection. That's about it. You guys have a great weekend. This is Chris Robinson.